particular reason, it becomes very important that recording of transaction be paid due should be given proper attention. Now, we will see the accounting concepts in the light of Islamic Sharia. There are 6 key accounting concepts. Accounting concepts are different from accounting conventions. Accounting concepts are also known as accounting principles, accounting assumptions, postulates, etc. Conventions are the traditions. However, the accounting concept, principles, postulate, they are the rules, laws that are mandatory to be followed. If you are preparing something in terms of account, but when you are preparing, you are not following the accounting concepts or principles, then in that case, whatever you are preparing is anything, but it is not accounting. Because even if one accounting principle is broken down, is not followed while preparation of account, the whole exercise will produce some information, some organized information, but it will not be accounting. So this needs to be understood at the outset. Now there are certain accounting concepts, 6 accounting concepts which we are going to discuss in the light of Islamic Sharia. The first one is business entity concept. The business entity concept, anybody, what is business entity concept?
So every business is a separate entity.
Okay. Every business is separate entity. Okay. Anybody else?
Business is a separate entity from its owners.
Yes. Very good. So business and businessman are different, and accounts will always be prepared from the point of view of businessman. This second part of the definition, that account will also always be prepared from the point of businessman, is very important, because at times it happens that when we are also trying to understand accounting transactions, we assume ourselves to be one party. However, the correct approach is to select yourself as the business, and then from your perspective you have to record, not from the perspective of the businessman, but from the perspective of business itself. So the first accounting concept principle states that business and businessmen are different entities. If we study this in the light of Islamic Sharia, then it is clear that in this kind of situation, if suppose Mr. X is businessman and X Limited is business, it means X is the responsible person. Excuse me. It means Mr. X is the responsible person. And if Mr. X is the responsible person, it means that responsibility and accountability can be fixed to a particular person or to a particular group of persons. The concern of Islamic Sharia is that accounting and responsibility should be fixed. Apart from others, these two are the criteria. So if accounting and responsibility is fixed, then there is no problem. So in this kind of principle, it is clear that the business and businessman are different entities, and account should be prepared from the point of a businessman. So therefore, it is justified to use Sharia to decide about it. It is in line with the objectives of the Sharia. Clear? The second accounting principle. Anybody can recall the second accounting principle? What is the second accounting principle? The money measurement concept. That only those transactions will be recorded that will be expressed in money. I'm not talking those transactions that bring money, that can be expressed in monetary form. If there is any transaction which cannot be expressed in monetary form, it will not be recorded. And Sharia also do not have any objection to that. That if there is any transaction which is having any monetary value, that should be reflected in the business. However, in conventional system, in case of money measure concept, now new and new ideas are coming that even some psychological variables and, for example, some fights can also be, measured in terms of money. However, in this term, Islamic economics is quite, simple. It takes the stand that there cannot be any division. Okay. So this second one, that is money measurement concept, the concern of Islamic Sharia is that it should be those transactions that reflect money value. They should not be transactions that may be measured in terms of money, but they should reflect money valuation. For example, if suppose today somebody says that a quarrel resulting in loss of time will be measured in money and that will be recorded in accounting. The concern of Islamic Sharia is that whether this reflects in terms of monetary value or not. If it is not reflecting in terms of monetary value, it should not be measured as into the accounting system. The third concept is going concern concept of accounting, which assumes that accounting should continue. The account should be prepared in such a manner that the business should assume that the business will always go for a longer period of time. Meaning thereby that it should not be assumed that after 2 months, after 1 month, or currently, the business will not be continued. Because the point you say that business will not be continuing, the need for balances transferred in accounting will not be there. So therefore it is required. Otherwise, there is no such importance associated to that. Okay. So this is about going concern person. Then fourth one is the concept of revenue recognition. Now, revenue recognition concept is quite, it tries to argue that revenue should be recorded when it is earned. However, due to transport, due to time lag between the actual transaction and the delivery of the products, it becomes sometimes difficult to determine what kind of revenue should be recorded and not. So the revenue recognition concept states that the revenue which is earned, whether it is received or not, should be recorded. Islamic Sharia again do not have any objection to that it should be earned and it should be recorded. The issue which Islamic Sharia tries to argue is that revenue which is acquired by selling of the products, where there is possibility of returning the goods, that should not be considered revenue until and unless the time period of return has gone by. So you can write down it as accounting advances, but later on you will have to adjust with those that are returned back because customers after that duration or during that duration has returned your amount. Clear? This is another principle. Next principle of accounting is the historical cost principle or historical cost concept. This concept states that an asset is purchased at the cost and this cost should be reflected in the books of accounts. Which means Suppose a company has purchased lands of India, rupees 2. For example, for rupees 2 crore. Okay, so they have this concept that they are purchasing for 2 crore rupee machine. So, but today the value of the machine, let's take the example of land because that is more practical. You purchased a land of rupees 2 lakh in 2010. Now the value is 20 crore, 20 lakh, 2 lakh, 20 lakh. Now, what value should reflect in the books of accounts according to historical cost concept? Any idea? Okay, historical cost concept states that assets, liability, and capital. These are the three key terms. These three key terms should be taken into consideration. If they are not taken into consideration, there may be certain issues and problems. Everybody is getting the point?
Yes, sir.
So therefore, the historical cost concept means that when a machine is purchased at a particular cost, suppose in 2010 you purchased for 2 lakh rupees, the same price should be reflected in 2020 even if the market value is 20 lakh. Why? The reason is that because market value is still in the air. We don't know when we will go to, when we will sell our asset, whether actually we will get 20 lakh or not. So therefore, this is a conjecture. So therefore, the value will always be reflected in the original amount at which it was purchased. But yes, once you sell it and it is sold at a very high price, so the difference will then be the capital gains or the abnormal profits. Now, again, Islamic Sharia doesn't have any objection to it because it is logical that we cannot inflate or change the recorded prices just because they are changing in market. So, if suppose every day land prices are changing or every year they are changing, then we will have up to value every year about the land. And this should be considered whether actually we are willing to sell the land or we are selling the land or not. Okay. So if somebody has a 20 lakh a home or a land worth rupees 20 lakh and they say its valuation is 20 lakh, that is correct. Today it is 20 lakh, but you have not sold it. So therefore, your worth is not 20 lakh. The valuation of an asset which you have is 20 lakh at market price, but the worth actually is the what is mentioned. You getting the point? So these are the accounting principles, and it seems per se that Islamic Sharia do not have any objection to these principles. Okay, is it clear to everybody? Everybody is working on assignment and presentation.
Yes, sir.
Yes, sir.
Okay, then all the best. I will continue the next class. Okay, tomorrow.